It's Thursday, September the 21st.
This week, a little cooler air has come in, and if you've had your yard aerated,
yes.
Yeah, the rain this weekend.
Get aerated. That would have been
aerated.
Tough.
Yeah. Pump air into it. But it will be maybe a good weekend for those seeds and fertilizer and everything. But it is the weekend, and tree leaves are beginning to turn.
Yes, and the Fed did exactly what we thought they were going to do, and that is to do nothing. But we do think that they will do something before year's end, probably around a 25 basis point increase, either November or December. They're definitely going to be data dependent moving forward.
Jerome Powell came out yesterday, and he indicated it would going to take a little longer, and the interest rates are going to get a little higher. Longer and higher, and then the real mathematical, magical dot plot, that is the pictures of where all the voting members are falling in on what should be done. They're all congregating around, we need to increase interest rates.
By 25 basis points.
That's correct.
Yep. So it looks like we'll see another slight increase before year's end. I think if you're a betting person and you're betting that interest rates are going to go down in 2024, I think you might be losing that particular bet. I think most of the pundits that we have relationships with believe that the rate decreases won't start until 2025.
Brian Westbury, who we often refer to as he's the chief economist with First Trust, in an article that we receive every week, came out this morning and said, really, the path is unclear. It is going to go up, but we don't know the speed. We don't know the length. But both he and Phil Orlando had said if they are going to decrease rates, it won't be till the latter part of 2024 at best. What that is doing, it's something you said interesting enough. And we've mentioned with you, we have our a stock picker list, which we are beginning to implement on a select basis with each client that feels the risk reward is the right time, but that list is probably the smallest list as in number ever had.
And very boring. There are not a lot of tech stocks. There's not any of the sexy AI stocks because they've had such a run up. So it really is kind of meat and potatoes for sure. And then we've got so many things that coming down the path that are inflationary, whether it's higher oil prices, higher increases in health insurance that are coming down the pike, the plant shutting of UAW workers. I mean, just a lot of things that are inflationary that I think are just going to keep inflation to be very stubborn the rest of the year.
This continues to keep the yield curve inverted. Short-term rates, 2 months, 3 months are in the 5.5 plus range. And now you're seeing even 1 year's getting above 5. So it's going to carry us into November. We got a lot of money maturing within your accounts in November. We'll be evaluating what to do. We'll be looking at what all the information is. We'll be expecting the Federal Reserve to increase interest rates probably in the November, December.
I mean, the 10-year is at a 25-year high.
Right.
And the 2-year is at a highest it's been since 2007. So we're going back in time with seeing yields this high. So that doesn't portend well for interest rates in the near future.
Yesterday's meeting, EJ and I were all the way up in Lynchburg, Virginia, meeting with a brand new client that has a amount of money coming out of a retirement plan, and we talked about where to go with it. We talked about wanting to be in the stock market, in which we said, let's make the smaller percent in the stock market on a very select basis. But if we can get in excess of 5.5%, reevaluate it in November, and then maybe get something higher, why wouldn't we do it? Thumbs up. That's what we're doing. That's how we're approaching where you are. So we have good stocks in everybody's portfolio that wanted stocks, and we have money maturing that we're getting a good rate of return, and we're seeing where the Fed is going to take us. So there you have it. We're glad to be with you each and every Thursday and Friday. Enjoy this weekend, but always know it is your money.
And your money matters.
See you next week.